Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. Today I'll be speaking with Mr. John Carter, a well-known and highly esteemed trader of stocks, options, and commodities. Mr. Carter left corporate America to pursue full-time professional trading in 1998. His media appearances and YouTube videos are extremely popular and informative. Currently, Mr. Carter is the president and CEO of SimplerTrading.com and SimplerOptions.com. Thank you for joining me today on Looking at the Markets.
Hey, David. It's fantastic being here and looking forward to your questions.
Absolutely. I'm looking forward to your answers. So I'd like to start at the beginning and how you first got into finance and options trading. I read that you doubled your money on your very first options trade with calls on Intel. Is that true?
It's true. I'd like to say that I did that on purpose and I used skill, but that is not the case at all. I had come home one night after working. It was toward the end of the summer, and I came home one night. I'd been working all summer at the mall. I think it was a cookie company, making $4 an hour minimum wage. I'd saved up like $1,000 after the summer, and when I came home, my father and some of his friends, this was a Sunday night, were sitting around the table. I don't know if it was an Investor's Business Daily or Wall Street Journal, but I heard him say something about, wow, we could double our money, and I stopped and turned around and said, what are you guys looking at, if you don't mind me asking? And they started talking about, I didn't know Intel, what that was. I didn't know it was a company. But the short version is like, hey, yeah, Intel has earnings. We're going to buy these call options for a run-up in earnings. I had no idea what they were talking about. But I'm like, can I get in on this? So obviously I couldn't open up an account. But I said, okay, look, here, I wrote my check out. Here's $1,000. Can someone place this trade for me in their account? And they said, sure. And essentially, if I lost the money, I'd be out. So a couple of weeks later, I got my original $1,000 back plus another $800, so nearly doubled. And the big thing that stood in my mind was that I had just spent the entire summer slaving at a crap job for $1,000, and now in this case, based on an idea, based on research, I was able to make nearly the same amount of money doing absolutely nothing except from an idea. And at that point, I was hooked.
Understandably, hey, why go back to working your butt off when you could do it this way? I like that story. That's really inspirational. Now you're associated, let's go to the present time, with SimplerTrading.com and SimplerOptions.com. Links are in the video description. What's the difference between the two, and what will people find when they visit these websites?
Sure. Simpler Trading is really more of a hub. So, if you go to Simpler Trading, you'll see Simpler Options and Simpler Futures. And so then we just kind of, divvy up. I personally prefer trading options. I'm about 70 to 75% of my trades are on options. The rest are kind of futures and some stocks. But the idea is just kind of if somebody wants to learn more about it or get actionable ideas, there's always theory and hindsight is great, but we kind of lay our reputations on the line saying, look, this is what we're doing right now. This is what we're doing tomorrow. This is how it worked. And that's what we do on those sites. And so the idea is that if you're newer, there's some education there to get you up to speed. Some of it free, some of it's premium. And then if you are, say, intermediate to advanced and you're just looking for some trade ideas, we've got some very powerful scanners that we use. Those are also available on the site.
There's so much on these sites. I just wanted to mention, I'm looking at it right now. Simpler Options, for example, has free videos, knowledge base, recordings. Just great stuff here. So everybody needs to check out both the free resources as well as the subscriptions that are available. Now, I wanted to talk about volatility in the markets. Now, most people associate volatility with fear. But I get the feeling that you actually look forward to market volatility. Is this true? And how can traders take advantage of volatility?
Well, from a trading perspective, market volatility is fantastic. And the thing about what I've found is that you can. The great thing about trading is there's a lot. You can Google how to do an iron condor, and you can learn how an iron condor works. But what you don't know is when it's appropriate to use that. And when volatility increases, you just have to understand which strategies work the best in those markets. The bottom line is that I love volatility. I like the idea that if you have a safe, quiet, bull market, that breeds complacency. I want a market where people are nervous. I love the fact that the headlines right now are all bearish and people are worried about political risk, and it creates an environment with lots of opportunity. And the beautiful thing about being a retail trader, okay, is that and the reason retail traders, there's edges that we don't have, but the edge that we do have is liquidity. Okay, a large hedge fund cannot go in and do like a 4 or 5 hour trade on Best Buy. Like, okay, I'm going to buy some options and then flip them out. They have to only consider positions that can take sometimes weeks and months to build up and weeks and months to get out of. And so we have a niche that's really fantastic for making what I would call outsized gains that hedge funds do not have. They do not have that same opportunity.
Yeah, hey, I crave volatility as well. I might be a volatility addict. I'm not sure. I might need to go see somebody about that. So, I recently had the pleasure of speaking with Miss Carolyn Borden, a.k.a. the Fibonacci Queen. And you're also known for having expertise in this area. Now, what's special about the Fib retracement levels? I've got them memorized myself, 23.6%, 38.2%, 61.8%. And how can traders use these levels to their advantage?
So, and for Fibonacci's, and I learned all that from Carolyn, by the way. She's been my guru in terms of learning Fibonacci's and extensions. I prefer, most of my work is done on the extensions. So, a stock can pull back. It can pull back, 382. It can pull back 50%. It can pull back 618. But where I really like those is for the, the targets. If it busts out of a trading range to the upside or breaks down of a trading range to the downside, man, those 1272 extensions are some of the highest probability targets out there. And the biggest mistake I see people making in the markets is they'll get into a position and then either one, they sell too soon, or two, what's worse, is they get into a winning position thinking that it's going to go on forever and they don't know where to get out. So in trading, it's the exits that make you money, and those Fibonacci extensions, especially the 1272 and the 1618, are where it's at.
There's just something about those numbers that just seems to work, and that's great advisement right there. Don't just use the retracements, also look at the extensions, which is something we all need to work on. Now I'm looking right now at simpleroptions.com, and I see there's a $7 trial. That's great. What can you tell me about that?
So the trial is, the idea there is we want to build up a trading community, and so we have set it up where we have a live chat room. It's like a webinar that goes on all the time that the market's open, combined with text alerts. So if you're working full time, you don't have time to sit in a chat room all day, we text out the trades that we're actually doing, entry and exit. And the whole idea there is it's a community. And so my vision with this is if you get a room full of, say, traders who are kind of all educated, they're maybe different levels, but they're looking for different things. What happens is it becomes an idea generation tool. So some of the best trades I've done this year were people that posted in the room like, hey, have you looked at Momo? I'm like, no, I haven't. I've been so focused on Amazon. And that turned into one of our best trades of the year. And so the whole idea with this is it's a supportive community. There's different points of view. The traders in the room help each other out. And if you're just looking for trade ideas with specific entries and exits, it's also that. And some people want to learn how to fish. Other people just want to fish, and that's fine.
Yeah. So what I like about that is that you're not just talking the talk. These are trades that you're actually making with your own money, and that's fantastic. So $7 trial, you can't beat that. Again, people really need to check that out at simpleroptions.com. Now, for traders with short attention spans, like me, weekly options are a godsend. However, some people view the weeklies as high risk. Are there relatively low risk ways to profit from weekly options?
So I'm a big fan of the weekly options as well. One thing that you might consider is looking at bi-weekly options, meaning that, okay, if it's today's Wednesday, instead of trying to sell options that expire in 2 days, sell the ones that expire at the end of the next week. It gives you a little bit more flexibility, plus you get that weekend decay. But that being said, with weekly options, today is a good example. Amazon and Google are on a race to $1,000 a share. And by the time I think we got on this call, Amazon was trading at like $9.97. Well, that's a great way to use weekly options. You can get, you can get close to that strike price with a low delta and participate in that movement. So I am a fan of weekly options for some of those, especially those bigger stocks and catching some of those moves. But I found a real sweet spot selling options that are the next week out. On a Tuesday or Wednesday, go out to the next week. And it gives you a lot more juice, a lot more premium. Yeah. Plus, you get that weekend decay. Plus, you get a little bit more extra forgiveness if you need to work your way out of that trade.
Yeah, you can manage your trades a little more easily when there's a week and a half left as opposed to just a few days, for sure. I'm going to have to look more at the... I myself am going to have to check out those bi-weekly options, take a closer look at those. Now, with the disclaimer that we're not giving investing advice and we're not making any recommendations to buy or sell anything, here's the question everybody wants to know. Are there any stocks, companies, or sectors that you are bullish or bearish on for the remainder of 2017?
So the only loaded part there is the remainder of 2017. So
right.
my sweet spot is always a couple of weeks, but that's a fair question. So I do think that, so for the markets, and what's interesting as a trader is I'm a closet bear. Like, the downside of the market is way more fun than the upside because markets go down a lot faster. That being said, you never want to be bearish just because, of bad news or because stocks are too high, et cetera, et cetera. So in terms of stocks and sectors for the rest of the year, what's been interesting to me the most this year is that, and this is kind of it's not really a specific sector, but it's a specific category of stock, and I'll tell you exactly what it is. I look for stocks that have a short interest of over 20% and are within 10% of new all-time highs. And when you get that combination, and what I found in stocks that recently fit that example are, Momo, Best Buy. There's been a lot of them this year where what happens is once they get that close to new highs, the shorts that are in that stock get nervous and start to buy. So you got the shorts who are covering, which provides upward acceleration. Plus, you've got new buyers coming in, and those stocks have exaggerated moves, which is fantastic when you're buying options. So if someone said to me, John, there's only one type of trade you could do the rest of the year, that would be it. So it's not a specific like, I'm just going to buy energy. It's specifically looking for that situation.
I thought I've heard it all, but that's a formula I have not heard yet. Fascinating. So just to repeat, just to reiterate, so 20% or greater short interest and within 10% of the all-time high, is that the formula?
That is the formula. Now, to find that stuff, you can go on a stock, there's free sites like FinViz. There are where you can look at short interest stocks. You can look at Yahoo Finance. We do have a stock scanner that screens specifically for that, and that's what I use. But it's one of those where if you can do some hunting and pecking, you can find it on your own as well.
Yeah, fantastic, actionable ideas right there. Just a couple more, if I may. With the major U.S. market indexes near all-time highs, as we all know, would it make sense for traders and investors to go light on equities and start hedging right now? Should they hedge with GLD, SLV, TLT, or even TVIX, something like that?
So here's and that's a really good question, and I get that a lot. And here's the way I look at that is that nobody knows when a trend is going to end. Do I think that the markets right now are kind of ridiculous? Yes, but I also traded during the late 90s, and I saw that bubble. We actually haven't seen that yet if it's going to happen. So my mantra is that the trend is your friend until it ends. And so meaning that anybody who's been trying to pick tops this year is getting destroyed. We don't know when this market's going to top. Maybe it's topping today. Maybe it's going to be at the end of 2017. We just don't know. So here's the way I look at that is that hedging is kind of a double-edged sword because if you're so well hedged, you're not going to capture any gains. So one way to hedge is just to lighten your overall exposure. So there's a couple of different ways to look at this. So one, it's like if you've got 50% cash, 50% equities, and you're nervous. Okay, well, you could just buy some puts on the S&P 500. Now, a lot of funds are doing that, and those puts expire worthless week after week after week, and that's fine. That's their insurance. You just want to make sure that the money that you're losing on those puts isn't offsetting any gains that you're making in your longs, because if that's the case, you might as well be flat, right? One good way to hedge is to be long the yen. So you can do that with an ETF symbol FX, I think it's FXY, or FXJ, but I think it's FXY. It is FXY. And so you can buy calls on that. And what's nice about it is that if the market suddenly tanks, that will typically spike higher. And what's also nice is that if the market's going up, sometimes that just trades sideways. So what I found is that that's a good overall hedge. And obviously, if you trade futures, you could just be long yen futures. Not to be confused with Forex, which is dollar yen, which goes down. Okay, yen futures go up, dollar yen goes down. So hopefully that's not confusing. But what I'm looking at is the yen futures to hedge there.
Again, something I've never heard before. Thought I heard everything. Hedging with the yen, FXY, a freely tradable ETF there. I just looked it up on Google Finance while we were talking. There it is. Very nice. Yeah, I'm gonna check that out. And I imagine it doesn't have the decay that TVIX or VXX, one of those, would have. So
correct, and the implied volatility is really low. And if you check out like last Wednesday when the markets had that 40-point sell-off in the S&Ps, check out what FXY did, and that's the kind of stuff where it can pay for itself.
Yeah, I see it. Fascinating. Wow. All right, I'm going to start using these.
Oh, good.
Yeah, fantastic. Mr. John Carter, I've got you here on Twitter at John F. Carter. Is that correct?
That is correct.
And are there any other social media sites that we should be checking out?
That's kind of the main one. I've been kind of slow to social media. I mean, I'm trying to figure out Instagram and some of those. Most of the time, I'm just trading, right? But Twitter is a good place. I mean, that's where I'm posting just like some different things I'm doing and stuff like that as well.
Gotcha. And of course, people could always visit simplertrading.com, simpleroptions.com. Links in the description. Are there any other ways people can contact you if they'd like more information?
The best thing to do is if any of this stuff looks good. I mean, I've got a book out called Mastering the Trade.
Yes.
It's a little old, but it's got some good stuff in it. I would suggest if any of this stuff resonated with you, try out our trial. I mean, it's $7. Use that 30 days to milk all the information that you can out of us, and then go do it on your own, which is totally fine. I'm more about just kind of providing value. The whole idea of our subscription program is to create a community, and the community obviously should create an amazing ROI on the money that you're investing in it. And if any of this stuff resonated with you, I encourage you to do it. And if not, there's tons of other stuff out there, and I wish you the best.
For $7 at a trial, you cannot go wrong. So why not just check that out? There's so much more to learning how to do this than just watching a couple of YouTube videos, even this one. Thank you, Mr. John Carter. I'm so pleased that I got to speak with you today. I can't wait to put this out on YouTube. Thank you so much. I really appreciate your time today.
Thank you, David. You're a good interviewer.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.